Hey, everybody. Welcome to the All-Star Options Jam session. I'm your host, Sean McLaughlin, at Options Sean on Twitter. Today is Thursday, August 29th, 2024. We are post Nvidia. We got the Nvidia stuff out of the way. We did a trade in it last night for all you junkies that like to trade earnings. It didn't work out for us. We didn't lose a whole lot of money, which is the good part. Had we done a traditional earnings type trade that I don't usually do, but had we done one of those, that would have worked out just fine. But we wanted to define our risk and, just define our risk. And we didn't want to get hurt too bad if we were wrong, which we didn't. So that's the good news. But before we get into any of that stuff, let's drop the old disclaimer, of course, that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you are learning something from being here. That's the hope, right? All right, so let's get into Nvidia, because that's what everyone's talking about, right? I mean, Nvidia was basically the market yesterday. If you traded indexes, especially the Nasdaq, I mean, you were basically trading Nvidia. That's what everybody wanted to look at. It's everybody would watch that. And guess what? As we discussed on the morning show this morning, it was a big nothing burger, which that means for options traders, the traditional options traders who sell premium ahead of earnings events, they were the big winners. And they're usually the winners, right? Not always. And when they lose, they can lose bad. I mean, typically what happens is ahead of an earnings event, if you are a specific earnings event trader trading using options, typically you'll do something like sell an at the money straddle, or you'll sell a strangle, and you're just betting that the move is going to be less than what the market is pricing in. Volatility is going to come in, and you're going to buy it back for cheaper than you sold it the night before. That's typically what happens. And people who did that are clear winners in Nvidia. We did not do that. We did a put ratio spread where we shorted the at the money puts, which was 125 near the close yesterday. We sold the 125 puts, and we purchased two 115 puts, and we collected $1.15 net credit to do that when we put the trade on. Unfortunately, this morning we had to close the trade, and it cost us $3.35 to close it. So we lost $2.20. Not terrible, right? Not terrible. We took a swing, didn't work out, brush it off, move on. I don't do a lot of these trades, but everybody was asking for, we had a lot of people asking us for an earnings trade in Nvidia. So sometimes you just got to give the people what they want. And so we did that in Nvidia, and we are done with it. Now let's just talk about the big indexes here real quick. S&P, I mean, look at where it's at. It's knocking on the door, new all-time highs. The Qs still have a little bit of work to do, as you can see here. What's it going to take? Who knows? We need to get the big caps going again, the big cap tech stocks going again. Of course, VIX getting pummeled again. Not pummeled, but back down, getting smacked back down towards the low range we've been in post. What are we calling August 5th? The Japanese yo-yo? That's what I like. But back near the lows of that. So basically, finally, it's the end of summer. We're here. Today, tomorrow are really like traditionally the last trading days of summer, because as you head into Labor Day weekend, that's the last hurrah for summer. And the next week we get back to business. And if we didn't have Nvidia earnings this week, this probably would have been a very sleepy week, but Nvidia kept everybody at their trading station. But it is what it is. All right, so let's get into what we do here at the All-Star Options Jam session. If you're new here, is we like to review any action that's happened in positions that we have on, any exits, any adjustments, things like that. We'll also run through updated stops on all of our existing positions that are working. And then we'll do a quick little review of any new trades we've put on since we last spoke. So let's do this. Let's go to the closed positions. And we already talked about Nvidia, so we can check that off. And then this VKTX, this is Viking Therapeutics. We didn't actually exit this trade. We did an adjustment. So back in early July, we purchased the September 80 calls for 425. And, it's been, as you can see, it's been a roller coaster since we got in. We got in here, we were immediately wrong. And then we were looking like we were geniuses. And then it faded, and we're looking like idiots again. And then it comes back. It's just a yo-yo, this trade. At the end of the day, basically what we decided was we just needed more time, because these were September 80 calls, so they expired next month. So we decided we needed more time. So what we did is we rolled these options forward into November, I believe. Same strike, paid a little debit, a little bit more to do it, but we've rolled this position forward. All the details are on the website, allstarcharts.com. You know where to find it if you're a subscriber. It's all in there. So that's really the only portfolio action we've had this week. No exits. Well, except for the Nvidia, of course. So not much to talk about on that front. Really, where all the action is for us right now is with the updated stops. We have 7 positions that are more or less doing what we'd like them to do. But we want to, trail our stops below it just to, keep us in the game, keep some of the profits. And so in no particular order, let's just start at the top of this list here. Upstart. This is a January 40-70 bull call spread that we got into not too long ago, a few weeks ago, middle of August. We paid $5.35 for it right in here. So far, so good. It's going our way. Very good. It's actually starting to knock up against the previous highs set back in late December of last year. It would not surprise me at all to see the stock just kind of muck around in this area for a little bit, digest these gains, because we do have some upper resistance here. But we've got until January for it to fight through that and finally make the breakout we're hoping for. Either way, I'm moving my stop up to 35. Now you can see it here. 35 is my new stop in Upstart. Any closing price below 35 will get me to close the trade. All right, next up, CM, which is Canadian Imperial Bank. I call it CIBC where I come from. This trade's working out phenomenally. We got in on August 12th, I believe. We bought the December 55 calls for $1.05, and look at this. Look at this move today. I mean, we already had a great move, just a nice grind higher, and then today an explosive move higher. This position is working great for us. We're going to give it some room. Okay. It's earned the right for some room for some volatility, but we're moving our stop up to 51.50, just above, a little bit above where we got in. So we don't want to see CM come back below 51.50. Hopefully we'll be raising this stop level more in the coming weeks, but for now, 51.50 for CM. All right, Coupang. This one so far not looking so good. We got into some February 25 calls back on August 20th or 21st. Not working for us so far. We are moving our stop up to 21.50. We don't really want to see it lose the 50-period moving average, which is this blue line here. If it gets below that, I want out. I also have a stop just on the price of the calls. If the calls lose half of their value, so if they start trading below $1, I'll pull the plug, and we're starting to get close there as well. So either we close below 21.50 on the stock, or the value of the options decreases below $1. Either way, I'll pull the trigger and get out of Coupang. Okay, GE, finally, is this thing finally going to break? Look at today's candle. Much like CM, this thing's having a nice move today. It still needs to, it really needs to break above 170, let's call it 178 to make me feel real good about this. But you got to like the way this is looking right now. Basically, we are now, we're long the December 170 calls. That's it. We started this trade. We bought the December 170 calls, but we financed it by selling a August put spread and shorting some August 180 calls. But those have all since expired, worthless. Actually, I covered them for 5 cents each. You can see right there. So add those 2 debits of 5 cents to our original net debit. Our current running cost for this trade is $9.42 for the 170 calls, but we're already $5 in the money here. So this trade is looking good, but I don't want to see it come back below the 50-period moving average, 165. That's our stop loss now. Any close below 165 for now will get us out of GE Aerospace. Next up, Caterpillar. We got into this trade back on July 10th. We did a protected risk reversal. So we bought the January 380 calls, and we sold a January put spread against it to finance the purchase of those calls. We got in, net credit all in. We got in for 50 cents. So far, so good. Trading is going our way. Ultimately, it'd be great if we could just cover this put spread for super cheap, which I'll be on the lookout to do. And then we have a free ride, not a free ride. Oh yeah, we do have a free ride on the January 380 calls because we're in it right now for a 50 cent net credit. All right. So if I could buy this put spread back for anything less than 50 cents, then I'm riding the January 380 calls for free, essentially. Love that. But right now, we moved our stop up to 335. We don't want to see cat below 335. If we do, that's my signal to exit the trade. At that point, it'll probably be close to a scratch, maybe a little profit, depends. We'll see. All right, next up, RSG. Okay, two things about RSG. We're moving up our stop to 200. We're long a January 195, 210 bull call spread that we paid 550 for. We basically bought this dip right here. It's not something we do a whole lot, but boy, did we time this one beautiful. Sometimes it's better to be lucky than good, right? We timed this this purchase beautifully. Our stop is now at 200. We don't want to see it come back below 200, but you'll notice this line up here, 210. That's our short strike on the calls. Above 210, our gains are capped. So if and when RSG trades to and through 210, which we're almost there, we're $1.50 away. If it gets to and through 210, I'm going to close the spread, take the profit, whatever it is. It's going to be a nice profit. We paid 550 for it, but we should be able to get out for at least 10 bucks, probably more, if it breaks 210. But more importantly, the stop is 200 now for RSG. And finally, AZN. Here's another trade that's just grinding higher, looking good. It took a little while. We got into this trade back in middle of May. It kind of just, frustrated us for a little while going sideways, but it has decisively broken higher this month. We're long the January 85 calls. We paid 285 for. We're moving our stop up to 81. Okay. I mean, it's a long way off here, but if I scroll out, 102 is actually our profit target for this trade. If it gets to 102, we're going to take some or all of it off, but we'll talk about that later. We still have a lot of work to a lot of work to do to get there. But for now, the important level is 81. We don't want to see AZN, that's AstraZeneca, lose 81. Any close below that is my signal to get out. All right. That's our updated stops. Most of that's pretty good news, right? And by the way, a lot of these positions, we rode them through the volatility event of early August. We had to trim a lot of positions. We had to pull a lot of weeds. Unfortunately, we got stopped out of some stuff that eventually went back to work or look like it's working. But that's the cost of doing business, right? You never know where the carnage is going to end. So you have to stick to your discipline. You have to honor your stops. And we did that. But now the positions we have left, those weeds are now, the flowers are starting to bloom. Now that we pulled the weeds out, the flowers are starting to bloom, AstraZeneca is a perfect example of that. RSG is a perfect example of that. Caterpillar is a great example of that. GE is a great example of that. So I don't know. I like the way things are going for us. The last thing we'll talk about is new trades. We just have one to talk about because we've done 3 trades since we last spoke, but one was that VKTX where we just rolled the position forward. Then we had that Nvidia earnings trade yesterday. So really the only new one that worth talking about here now is Sherwin-Williams. We are bullish Sherwin-Williams. We got into this on Monday. If you want the trade details for this, go to allstarcharts.com. Go to the members section, go to the options section. You'll find all the details of this trade, what we like about it, how we're playing it, what option strategy we're using, where we're managing risk, where we might be taking profits. All those details are in there for all All-Star Options subscribers. And by the way, guys, in the chat there, I put the sign up if you want to sign up for All-Star Options and get all the trade plans ahead of time that we're doing here. You can sign up there. We'd love to have you. That's all I got for you guys. That's it. So let's bring this back up. I know you guys like to see this updated stops. You want to take that screenshot, you can. Those are all the stops we've updated today, all 7 of them. So pause the video, take that screenshot if you need to, and then come on back. If you have any questions at all, shoot me an info at Allstar, or shoot me a question at info@allstarcharts.com. Also, I'll put this also in the chat, but if you like the charts that I'm sharing here, I'm using trendspider.com. My friends at TrendSpider are giving you guys a promo. You can get 50% off subscription plans using promo code Sean50. I put the link in the chat. If you go there, tell them Sean sent you. All right, that's all I have for you, everybody. Have a great Labor Day weekend, the last hurrah in summer. I'm going to go spend the weekend up in the mountains here in Colorado. I'm looking very much forward to that. Hope you guys find a good way to relax and have some fun. College football's back. Go Gators. Big game against the Hurricanes this weekend. So everybody have a great weekend. When we come back next week, it's time to get to work. Time for real trading. All right. Take care.